Hello everybody and welcome to the Tortoise channel. In today's video is going to be on psychology and what shaped my investment process over the last several years. Before I delve deeper into the video, I want to say thank you for the ongoing feedback that you guys have been posting. I'm sharing my screen right now. In today's video is going to be specifically so the goal is to follow on from two comments on to our subscribers. Both of them comments to the video that I put out on Constellation software, which has gained a lot of traction. So apparently we do have many Constellation software hardcore fans. But I can see that Mohammed, for example, has been following the channel for quite a while, and he's just wrote excellent video again. I love your thought process behind your investment decisions. Can you kindly make a video of how you develop this thought process? Are you a professional investor who worked at a fund? And last but not least, Ro Taint Cheese, who just became a subscriber not many hours ago, he said, and this really made my morning because I read it. I'm recording this on February the 15th, right? So it's a Sunday. I will be posting this tomorrow, so Monday. And he said, this is one of the best deep dives I've seen on the internet. I've subscribed and look forward to more content. Looking back at your content, I noticed you invested in PayPal. In hindsight, what do you think went wrong? And has that impacted your decision to remain an investor? Many things. I love these comments. And some of these comments are not the good. So I have no problem with people that don't share the same views as me, and that's completely fine. As long as you guys put out constructive content, I'm okay with that, because that's what I do on other channels as well. I may not agree with the investors' decision making regarding one particular investment. However, I won't be how can I say, I won't be criticizing them, because I mean that's fine. Not we all have different risk profiles. We all have different temperaments. At the end of the day, we all try to make sound investment decisions, and hopefully many of us, certainly for those of you following the channel, you will all be making a lot of money in the next few years. That said, not all of you will agree with the same with some of the investments in my portfolio, but the key thing is you are constructive, right? So you share your views in a constructive manner. You explain exactly why you don't agree, and I'm perfectly fine with that. And so when I'm reading these comments, they really make my day. They mean the world to me. And I know that many of you, for example, have decided to sell PayPal, and I mentioned in the video that I put out immediately after the quarterly earnings report and conference call that I understand why someone would do that, because it was a mess. Okay, it was a complete mess, and so this video is going to be about addressing these two comments from Mohammed and Ro Taint Cheese, and hopefully I will make a good job trying to explain exactly the reasons that I number one, I've decided to stay invested in PayPal, but what actually is working behind the scenes, right? So what is it that has allowed me to remain more patient than most people? And so, and hopefully this will allow you to you will find the video very insightful as well. You will find it educational, okay? And so what I want to, and of course, and I want to thank you as well, because this is something that I will provide in a PDF to our community members on WhatsApp, and because I think many people, by far, the major struggle, and certainly I know this because I work with many clients, and their main struggle has to do with emotions more than anything else, because, and I mention this very often, you can teach everyone the metrics that they should look after at the time of making an investment decision. But what's going to be very difficult is to try to mold people so they don't really sell at the first sign of fire. All right. And this is something that you are born with. I mean, yes, you can learn from your mistakes as well as you go along your investment journey, but a lot of that also, I think it's something that you are born with. Okay. And so I want to discuss that right here. And so without further ado, let's jump right into it. And I think the perfect and this will also set the tone for the rest of the video. Let me start by sharing a great post that Pallavi shared on our LinkedIn profile. And she said, if you stayed invested through to World War II, you made money. Most people can't even stay invested through a bad headline on Twitter. I focus on businesses with skin in the game. And by the way, I mentioned Pallavi because Pallavi is working with us at Like a Tortoise. She has been doing a terrific job at spreading the word across the internet, and I'm forever grateful because I think she's very articulate, and what she says is exactly what we stand up for at Like a Tortoise, right? So when the Arnold family owns 50% of Louis Vuitton, they don't care about next week's news. They care about next decade legacy. I watched people jump into oil and gas stocks last year. I stayed in my boring circle of competence. Why? Because capital intensive industries are where profits go to die. By being the tortoise and focusing on ROIs instead of hype, I've maintained 20% plus returns, while the hares are still trying to find where they park their capital. This really, this really drives home what everything that I've been sharing here on the channel for the last several months. In fact, I started posting about 6 videos a week around 3 months ago, and I can see that we are already the number of subscribers continues to go up on a daily basis, and now we are at about 400 subscribers, which is lovely to see. And then reading comments like this, it makes me feel that we are definitely creating a lot of value for you guys. And so if that is the case, just continue to spread the words. You will find that we are very different from what other channels are putting out, namely because of the very concentrated approach to investments that we have, but also because of our patience, right? And I think these two things really will allow us to stand out over time because many people, even though they believe, even though they preach right long-term investing, what you will find is that they trade very often. We don't do that. And so, full disclosure, and if you guys are following the channel for months, then you already know this is the case. We haven't sold a single share in the portfolio for over 2 years now, right? So other than the shares that we have purchased, we haven't sold anything in over 2 years now. And that really means buying quality at great prices. I don't believe in paying fair value for companies, as you know. I believe in buying high quality companies. They don't need to be very high quality, but they need to be quality companies. And then I want to pay a great price. And you can only do that with a big margin of safety built in. All right. And then we only invest in a few high conviction names and we hold them for the long term. We don't sell them until the story changes or, of course, the price becomes egregious, by which point we'll be happy to hand over the shares to someone who wants to pay a much higher price. Okay. All right, so as I commonly do, I put everything together in a PDF, and I will be walking you guys through this because this is something that I share with our free community on WhatsApp. By the way, so also important to understand, many of you asked me about our free community. This is our WhatsApp community is entirely free, okay? And so we have about, as you can see right here, we have 46 members in this community. Many of you have come from LinkedIn, and I'm grateful for that. And I can see that the community continues to grow here almost on a weekly basis for sure, which is fantastic to see. This is entirely free. So how do we make money as a business? We have a company portfolio, right? The Like a Tortoise portfolio, but we make money from coaching. Right, so I only work on a one-to-one basis. We don't have group coaching classes, nor anything of that kind. I'm very selective with the people that I'm working with because I want to work with people who actually have money to invest. That's number one, and the reason for that is because it's much easier for you to see the results if you start with a certain amount, right? Because if you are just putting 1K, if even if you are compounding 1K at 20 or 30% in 1 or 2 years, you are not going to see, wow, life-changing results, right? And that's why I'm very selective with my target audience. That said, I provide value for everybody, and this is all free content, as you know, right? No matter where you are in your investment journey, but I specifically work with people who want to work with me on a one-to-one basis because they want to accelerate their investment returns over the next few years, right? And yeah, and so, but we do have a free community, and in that free WhatsApp group, I share these PDFs that some of them take me a while to put together, and they really have a lot of insights that can benefit you guys. And of course, I'm not going to share this on YouTube because I can't, right? You can't just share PDF documents here, right? And so I create a WhatsApp group where I share this information, and that also gives you access to other people in the community and to myself. But let's leave that aside. And you already know how to reach out to me. Just email me if you want, because the email is disclosed in the description as well. So what is the purpose of today's video? This document captures the core ideas, experiences, and principles that shaped my approach to investing over more than a decade in the markets. It's not a story of overnight success or professional pedigree. It's a story of learning, unlearning, patience, and temperament. And stay with me because I will give you amazing examples throughout this video. Okay, so my background. Now answering directly to our dear subscriber Mohammed, no, I never worked at a hedge fund. I was never a professional money manager. My academic background is in psychology and business management, followed by more than 6 years working as a software engineer. Investing was never my job, it was my obsession. This is important. Why do I say that? Why do I mean by that? Because while I was working as a software engineer, this was a full-time job. I was working every single weekend on my business. I loved investing. I was studying, I was investing in my education, taking online courses, reading books, subscribing to newsletters, and yes, working on my business in the evenings, but also on the weekends. I was living and breathing the stock market. It became an amazing passion of mine, and so much so that I really decided to leave my job as a software engineer and to focus on my investments in my business. But I couldn't do that until I had something to fall back on, right? So when you start a business, you won't become profitable overnight. And so I didn't leave that job until I actually had something to fall back on. And curiously, interestingly enough, you may not believe me, but this is the case. I was made redundant at a time that the business was already on the right track. So I was working as a software engineer at a great company, but then they decided to make the QA team the QA team redundant because they wanted to outsource that work to Portugal, where the services were much cheaper. And I understand that, right? So I get along with many people in that company. I still do. I wish them all the best, and I understand where they were coming from, because people in Portugal they don't get so the pay is not as high compared here to the UK, and you have highly competent people in Portugal. And sure enough, many of our subscribers are also Portuguese, and yeah, I know how clever you guys are. So that's it. And so because my business was already up and running, this was the best opportunity for me, and so I stopped applying to QA and solely focused on my business and investments. For over a decade, I've been a relentless student of the stock market. What fascinated me wasn't really spreadsheets or models, even though that was actually the case as well. But first and foremost, human behavior was what really fascinated me from the very beginning. How fear, greed, panic, euphoria actually drive the stock market over years. These emotions create plenty of inefficiencies in equity markets. And because I studied psychology, guys, This is so important right here. More than anything else, understanding human behavior, market psychology, and understanding your temperament inside out is the key to your investment returns over time, right? Coupled with a sound framework as well, of course. But psychology is definitely the most important thing. You look at that. My early years were so I wasn't always an investor like Warren Buffett. Many of you didn't know that, but Warren Buffett was a trader as well. For several years, he read everything on technical analysis. In fact, he started as a trader, right? My personal experience is that as while working while trading, I found that it was so like many investors early on, I was drawn to activity, right? Buying, selling, timing, and reacting. It felt productive, but then when I was looking at the returns, I didn't really like it because I was getting, it was very stressful, time consuming. I found myself glued to the charts almost every day. It was emotionally draining. Ultimately, it was also profitable because when you trade more often, you're going to have to pay more fees. You're going to make more emotional decisions, and that doesn't bode well for you over time. What I found is that I realized something uncomfortable, right? Most of the activity was noise, not really value creation. And many traders that I know, most of them are not as profitable as I am, even though they devote even more time to their activity than I do. And this was exactly the conclusion that I arrived, fortunately, only after 2 years into my trading journey. So I was able to make the pivot quite fast compared to many people. Gradually and very deliberately, I pivoted from trading to long term investing. This coincided with the time when I. This coincided with the time when I started reading everything I could on Warren Buffett, Peter Lynch, Charlie Munger, Bill Ackman, all of these guys, and yeah, and then I became an investor. And what I learned was that number one, it was more profitable. It was also less stressful because I was focusing on the long term, right? And so technical analysis became almost irrelevant because I was making decisions based on fundamentals rather than technical analysis. It was also less time incentive. And as a business owner, this was very important for me as well. And it was also more intellectually stimulating because now I'm looking at financial statements as opposed to technical analysis. And I find that to be more intellectually stimulating for me because I'm assessing it from a business standpoint, not as something that goes up and down on a chart. Okay, to me that's just it doesn't mean anything. And so I discovered that investing rewards clear thinking, long time horizons, emotional discipline, and punishes impatience, overconfidence, constant action, right? And guys, let's stop here and let's do some brainstorming right here. Why is this? What I want you guys to understand here is that think about this for a second. The most successful if we measure success from a financial standpoint, think about the richest people in the world. Are they traders? I mean, can you name me? Yes, of course. Some of them are. Some billionaires are traders. But the key here is how many billionaires that you know are traders versus business owners and investors? Exactly. There are many successful investors that are billionaires, and they all think as business owners, right? In terms of being traders, other than a few, like two or three people, you don't know many traders who actually have become billionaires. But you know many business people that have become billionaires, sure enough, because they concentrate their wealth into their company. They understand their company better than anyone. They grow with the business. And so this allows them to become the richest people on earth. Think about Jeff Bezos at Amazon. Think about Elon Musk at Tesla. Think about the most successful investor of all time, Warren Buffett, who is also one of the richest people in the world. And the reason he's not richer is because he gave away most of his wealth to charity. Can you believe that? And so this is our approach, right? And if you look, they all have one thing in common. They all concentrate. They all understand the companies they are invested in very well, and this bodes very well for them over time as business owners and investors, right? That's what we want to do here. So let's continue. Education outside the classroom. A huge part of my development came outside formal education. I invested heavily in myself through books, online courses, long form newsletters. I still read them every single week. And I read everything, guys. And if I show you right here my email box, look at that. Brendan and Fiscal AI, Marius from Investing Quality, you can see Brian from Long-Term Mindset, Compounding Dividends, Compounding Quality. I read everything I can get my hands on every single day, right? So these are all newsletters that I subscribe to, and many of my ideas have come from these newsletters. On top of that, I read everything that you can think of, like from Rule Towns Rule Towns books to Peter Lynch books to everything that was ever written and said about Warren Buffett to to his annual shareholders, right? To his annual letters to shareholders, in so much more than that. But you can see all of that here. In addition to that, I'm subscribed to certain YouTube channels that I find very valuable. This wasn't about shortcuts. It took years. It was about building a mental framework, learning how great investors think, decide, and behave when things are uncomfortable. And I'm very obsessed when it comes to education. I love educating myself, probably more than most people that I know. I love this. I just love educating myself. Okay, it's just non-stop for me. The biggest lesson: the money is made in the waiting. This stems from Charlie Munger's famous Charlie Munger's quote: "The biggest money is in investing is not in the buying or the selling, but in the waiting." Right? It's one of the most important lessons that I've learned. Is this one right here? This one's counter to how most people approach markets. Activity feels like control. Patience feels like doing nothing. But patience is not inactivity, it's deliberate restraint. And in this bit right here, this is where I will address the second comment, right, from Rotain Chi. So, Mohammed, my man, I hope I did manage to respond to your great comment. And now, Rotain Cheese, let me once again, thank you so much for that constructive feedback. And now let's talk about PayPal and why haven't I sold that investment? Okay. The reason is, and I believe I have that here. Okay. I believe I have that right here. Practical example: buying when others sell. If we take let's take PayPal as an example. While many investors are selling the stock around $40 and $50 a share, I focus on fundamentals. And yes, you can make the case that the fundamentals have deteriorated substantially from last quarter. Once again, I understand where you are coming from, okay? But there are reasons why I decided not to sell, and that's what this video will be emphasizing. PayPal generates $6 billion in free cash flow. I want to make that clear. PayPal generates $6 billion in free cash flow. So the company is never, right? The company was never at risk of going bankrupt, and I see some of these comments swirling across the internet that PayPal is dead, but the company is going to die. Guys, these people don't understand financials. PayPal is generating the highest level of free cash flow in its history. When I bought PayPal, Because Alex Chris, the former CEO, had stepped in, operating margins were growing, net margins were growing, free cash flow was at was at record highs, returns on capital were improving, revenue never stopped improving, never stopped increasing, earnings never stopped increasing. Okay, it's not like I was buying a dead company, and I don't believe that is still the case either. Because, as I mentioned, yes, the company is facing many headwinds. However, one of the reasons that has made me stay put is number one, free cash flow, record free cash flow. Uh, Number two, they have a new management team now coming into the company, and I want to give them the benefit of the doubt. And what I read, and this, guys, you have to understand these things. And if you are following the Like a Tortoise channel, then I do hope that I managed to educate you on these things. If you go to PayPal, right, and if you go to their filings with the SEC, just download this report right here. Where is it? Let me show you this right here. It's this report right here, the Form 8K. Look, it's right here. Current report filing. This was posted on February the 3rd, 2026. And what I'm going to show you right now, remember, I'm still a bit skeptical of the new management team because the CEO the coming CEO was CEO at HP, and HP is certainly not a payment company. So this guy has no experience in the payments in the payment world. So I'm a bit skeptical. But what I really like to read is the incentives. Show me the incentives, and I will show you the money. And while many people bought PayPal shares at $200, $300 per share, and they are in panic mode because they didn't buy it with a margin of safety, my cost basis is $63 a share, right? So it's not like I bought PayPal at $200 a share, because if that was the case, then I know that the chances of PayPal getting to that level just for me to break even are not great. Let's be honest. And if they do happen, it's not going to take 1 or 2 years. It's going to take several years, right? But my cost base is significantly lower than that because I already bought the company when sentiment was very negative, right? And so that is important for us to understand here. And in addition, take a look at the CEO, at the coming CEO, and the incentives. Okay, we already know that the CEO is Mr. Enrique Lores. And now look at this. This is so important. And I'm going to read this to you as well. Where is this thing that I was reading? Right here. Okay, this is the thing. Vesting terms of stock price PSUs. For those of you who don't know what PSUs mean, you can easily Google it right here. PSU usually refers to performance share unit, a form of equity-based employee compensation granted by companies to staff, promising shares or cash value only, this is critical, only if specific performance goals are met. So let's unpack that. You can see right here, the stock price PSUs will vest subject to your continued employment with PayPal and based on achievement of discrete stock price hurdles measured based on the average of the closing price of PayPal holdings common stock over any consecutive 60 calendar day period, each a stock price measure ending on or between the third or fifth anniversaries of your start date. And what's the start date? He is going to start effectively on March the 1st, so which is just a few weeks away, right? So, and what this tells you is that he is going to be highly incentivized to deliver certain performance from a stock price standpoint within that 3 to 5 year period, right? As set forth in the tables below, which we will read shortly. For clarity, for purposes of this letter, The stock price measure as of certain dates means the average of the closing prices of PayPal Holdings common stock over the 60 calendar days ending on such date. Okay, let's now move on right here so you will see exactly what we are talking about. Take a look at that. 60% increase. This is the stock price hurdle. What is that, right? 60% increase over the baseline stock price. That's 100% of target. So let's assume that when he starts on March the 1st, PayPal trades at $40 a share, which is just about what the stock is trading at right now. So 100%, right? A 60% increase of the that $40 a share would be the baseline stock price, right? So if he manages to get 60% of that number in a set amount of time, that will unlock certain shares as a compensation package, right? If he goes 100% in above that baseline stock price and at least $100 a share, that will give him 175% of the target. 100% increase over the baseline stock price and at least $125 a share, that will be 250% of target. And there you can see, look at that. Baseline stock price means the stock price used to convert the target value of the stock price PSUs into the number of shares to be granted, as set forth in this letter. Stock price hurdles set forth in the table above shall be equitably adjusted as determined by the compensation committee in the event of any equity restructuring, right? Here we go. And then here below, you guys can read an illustrative example where they discuss exactly how these incentives work. What does that mean for us as shareholders in PayPal? And many of you may still be invested in the company, right? I'm certainly one of them. It means, guys, that within a 3 to 5 year period, this guy whose salary is going to be around 1.5 million, you can read that above as well. That's how much he's going to receive. He's going to be highly incentivized to unlock a lot of share price appreciation over that period. Right? And so you can see that $125 a share is the best case scenario, right? To unlock all of that money. And we are talking about a lot of money here, a lot of millions. Again, just go back and read the form, and you can get more insights into how the compensation plan will work. But with the price currently, again, using $40 a share as our baseline, look what that means in 5 years, right? So let's assume that the guy, so at 40, let's assume the stock is at 125 in 5 years. Starting from 40, that will be, if your cost basis is around 40, that would equate to a 25, almost 26% annualized return. Remember, my cost basis is around 63, right? So let's say I jump from 63 to 125 in 5 years. That means, as you can see, almost 15% annual growth rate. And guys, this is not even factoring in what? Yes, the aggressive buybacks that the company has been undertaking over the last several years. And with the stock price at these valuation levels, I mean, and if the management only does something nice, because my cost basis is so low, I don't need things to go perfect for the company to have a very good return on my investment. And so while many of you guys thought that are panicking, right, because you probably bought shares at 150 or 200, my cost basis is 63. I'm not panicking at all. I only need one or two things to go well, not even amazingly well, to make a very good return on my investments. And remember that right now, our incentives are aligned. I like this compensation package as a shareholder, and I like the fact that PayPal is continuing with the share purchase repurchases. And look, they I don't agree with the fact that the board sacked Alex Chris. I think Alex Chris was doing a great job, and so do they. The reason they sacked him was because they wanted speed, right? They are like panicking, and so they want speed. Whether or not they're going to get that with this new CEO, it remains to be seen. But sure enough, they are aligning they are aligning the incentive compensation to that end, right? And that is a good thing as well. And this makes me feel bullish. Okay, so this is it about PayPal, and because you can go back and watch all of the videos that I put out on PayPal, you already know that the valuation is ridiculous. We already know that it was also ridiculous at $50 a share and at $60 a share, right? And of course, it's even more ridiculous now at $40 a share. But we already know that. You already know what I feel, my take on the companies of financial statements. This is a company that generates a ton of cash. It's not at risk of going bankrupt and has many outs. What does that mean? I can see you guys making this mistake over and over. PayPal is not just a payment solution provider. They used to be only that years ago. But ever since Alex Chris took helm of the company, they are transitioning into an e-commerce company, which means we have many outs. Yes, they are still a payment solution provider, but they are also into crypto. They are also at the forefront of agentic commerce. They are also offering buy now, pay later solutions. They submitted the application to start lending money to people, right? To work as a bank. We have many outs. And this is great because they are well diversified as a business. I understand that the core of the business is still the branded checkout, and they need to turn that around. Okay, I completely agree. And management, if I'm going to get this return on my investment, management needs to turn that segment around. There is no running away from it. And you can see if you go to the PayPal's investor relations segment, you can read about what the new CEO wants to do. Okay, let's see what we have right here. Today, Enrique is widely recognized as a visionary, will ensure Matiz's leisure payments and now into the future. Okay, Loris joins PayPal. By the way, he already has experience because he joined the board about 6 years ago, right? And he was working as a chair of the board. All right, so he knows PayPal, right? We will further strengthen the culture of innovation. Who said that? PayPal's leadership. Right here. We will further strengthen the culture of innovation necessary to deliver long-term transformation and balance this with near-term delivery, executing with greater speed. Here we go. He's emphasizing speed because he knows this is what the board wants, with greater speed and precision, and holding ourselves accountable for consistent delivery quarter on quarter. To further assert PayPal's industry leadership position, said Loris, the payment industry, here we go, is addressing the payment industry landscape because he knows very well he needs to turn that around. Is changing faster than ever, driven by new technologies, evolving regulations, and an increasingly competitive landscape, and the rapid acceleration of AI that is reshaping commerce daily. PayPal sits at the center of this change, and I look forward to leading the team to accelerate the delivery of new innovations and to shape the future of digital payments and commerce. Okay? So he's tackling that problem head on. He knows what shareholders want. He knows what the board wants, and I want to give him the benefit of the doubt, and I like to see these incentives that I already covered. Okay, and because I bought with a big margin of safety, I'm not panicking because I know the money is not in the buying or in the selling, but in the waiting. And just to wrap this up, let's drop the mic right here. And I want to give you a great example, a very good example. And you guys can do more due diligence on this if you want. But Berkshire Hathaway, okay, Berkshire Hathaway, take a look at this, guys. Uh, Patience in action, right? If you needed more education on patience, this is the best example that I can provide. One of the most powerful examples of patience in investing is Berkshire Hathaway's investment in BYD. For over 5 years, the stock went essentially nowhere. No excitement, no validation, no rewards, yet they held because they understood the business, the management, and the long term opportunity. That patience eventually paid off in extraordinary fashion. And let's show you that chart. Take a look at this, ladies and gentlemen. They bought BYD shares right here in 2008, and you can see that the stock went nowhere from 2008 all the way through 2012, as you can see right here. In fact, we can even say 2014, and look at that, 2020. From 2008 all the way through 2020, the stock did almost nothing, and they still held on to the shares. You look what happened after 2020. The stock went absolutely ballistic. Warren Buffett is not the greatest investor of all time because he made decisions that no one else could. I believe he's, in fact, I don't have to. I mean, we already know that for a fact. He has a very high IQ. He's a very bright person. But think about the quote that when he said, "We don't need to be smarter than we don't need to be smarter. We just need to be more patient." In BYD is the perfect example of patience in action. From 2008 to 2020, the stock did almost nothing, and they still held on to the shares. And have a look at the return that they got on that investment, and it will blow your mind. Am I saying that PayPal is the same thing as BYD? Of course not. What I'm saying is understand why patience is so important. And I firmly believe, and I'm betting my money on it, that I'm not going to have to wait all this while to get just to get a great return on my investment. Okay, because I understand the company, and based on what I'm already discussing right here. And by the way, I don't know a single person on LinkedIn, excuse me, on YouTube that has broken down this new incentive structure on the channel like I'm doing right here. In fact, just tell me one person who has discussed the PayPal in the upcoming CEO new incentive package, and I will be surprised because I haven't seen that yet. And what that tells me is that people have really thrown in the towel. They are so negative on PayPal. They believe that anything is negative. And this is great. Again, going back to psychology in what shaped me as an investor over time, right? And so that's it. This is what I wanted to share, guys. We already addressed that. The real edge, my edge, is not forecasting, it's not speed, it's not complexity, it's temperament. Being willing to wait, endure discomfort, ignore noise, right? Focus on long-term business value. That's how you become more than average, not by being smarter, but by being calmer. And another thing that I want to say is, guys, companies operate in a dynamic environment, right? And so because they operate in a dynamic environment, they cannot go up in a straight line. And even great companies will struggle at some point in time, right? We are seeing that, for example, with Constellation Software. The stock never declined more than 40% in its history until recently, right? So what happened? Has the company become shitty after 30 years of stellar execution? I don't think so. Every single company goes through these periods. Amazon crashed 90% during the dot-com bubble. Was Amazon shitty back then? I don't think so. In fact, judging by their share price appreciation since then, right, in the ton of shareholder value that they've created over the ensuing decades, I would say that was certainly not the case. They operate in a dynamic environment. What we want is a moat. And PayPal has a moat. Every single company in my portfolio, in the Like a Tortoise portfolio, has a moat. Yes, some of them have wide moats, others have narrow moats, but a narrow moat is still a moat. And I do think that the, the, and I do think PayPal has a moat because the company has access to over 430 million active subscribers, right? They operate the largest, the largest, how can I say, the largest two-sided platform in the world, right? Connecting both merchants and customers. So they have access to information that you guys can't even imagine, right? Not many companies are in that position. And now they also have an advertising business, and they have a very smart guy at the helm of this segment as well, which I think is going to unlock more value over time. Guys, we don't want to. I don't need to hold PayPal forever to make a very good return on my investments. I just need the company to execute just on a few things. And if the stock price goes to 125, I will do a very good, I will have a very good annual return. Excuse me. I will achieve my minimum acceptable rate of return of about 15% per year. And I'm happy. Okay, so I'm not panicking. Will I sell back then? Well, once the stock gets there, then I'm going to have to reassess the company. Okay, but that's the best thing about buying quality with a margin of safety is that you have some room for maneuver, right? When you pay too high a price, you need execution to be perfect, right? You need everything to go to plan for you to have a good return on your investment. I don't believe in that nonsense. And sure enough, Constellation software guys who were buying in 2021 have seen no return on their investment because the stock is at about 21 levels, right? It's a great company, but price is what you pay, value is what you get, and this is what happens when things don't happen as you want them to happen. All right? And so this video is a bit long, so row 10 inches. I do hope I've managed to. I did try to deliver a lot of knowledge, and I hope I managed to answer to this to your question as well. And that's it, guys. Look, if I will be posting this on Monday. Today is Sunday, but yeah, let me know in the comments below that if you found this video valuable, and I do hope that was the case. And if you did find it valuable, just share it with other people, and let's grow the community over time. In addition, get your cups like a tortoise. I've already ordered some shirts as well. In fact, my girlfriend did, so I have to bring them onto the channel as well, and to show you to you guys. But yeah, let's spread the word and let's invest like a tortoise. We are playing the long-term game, and look, I know and I respect many of my colleagues are investors, of course. They have been compounding money at absurd rates of return over time. But when they say we like buying quality and do nothing, I don't believe them. For example, a good example of that is Terry Smith. I don't know him personally, but I like his framework. But when he says don't and then do nothing, and then you look at the portfolio activity and he sells and buys every single quarter, I mean, to me this is not preaching what you teach, right? So in contrast, if you look at our portfolio, we literally haven't sold a single share in over 2 years, right? It's not because the company is going down that we are going to sell shares again. For us to sell, I mean, only a few things would have to happen, and I already discussed that as well in other videos. But anyway, I do hope you guys found this valuable, and please let me know in the comments if that was the case. And thank you so much for everything that you have done for the channel so far. And some of you have joined and have become members, and I definitely appreciate that. Have a great day, guys.